If you're worried about how to protect your retirement portfolio from economic shocks, you're not alone. With so much uncertainty in today's world, inflation, market volatility, and political instability, many retirees are feeling the strain. But there's a way to safeguard your wealth, and it doesn't have to be complicated. Here's the deal. Economic shocks can wipe out years of hard-earned savings, especially if you're relying solely on traditional investment vehicles like stocks or bonds. These can be extremely vulnerable when the economy takes a hit. But there's a solution that has been gaining popularity among American retirees, and for good reason. Now, if you're serious about protecting your wealth, especially in the next 2 weeks, I strongly recommend you click the first link in the description below to get a free gold IRA guide. Thousands of Americans are turning to gold IRAs to secure their savings, and you'll see why in just a moment. So, why is this important? The reality is, no one can predict the next economic downturn, but history shows that gold has consistently been a reliable store of value during times of financial crisis. When the stock market crashes, the price of gold often goes up. That's why many retirees are turning to gold IRAs. It's not just about protecting your wealth in the short term. It's about building a fortress around your retirement savings for the long run. Traditional assets like stocks can be affected by inflation or geopolitical tensions. But with gold, you're looking at a tangible asset that's been valuable for centuries. Unlike paper assets, gold is a commodity that doesn't lose its value as easily. It holds up well against inflation and currency devaluation, which is a real concern for retirees in this unpredictable economic environment. The most straightforward way to protect your retirement portfolio is by diversifying. Relying on one asset class, such as stocks or bonds, puts your wealth at risk when an economic shock hits. Think about it. When the market crashes, everything gets affected. But when you diversify, you spread your risk. And among the best ways to do that is by incorporating precious metals like gold. Gold IRAs offer a unique opportunity. Not only do you gain the protection of gold, but it's also tax advantaged, allowing your savings to grow without the immediate tax burden. It's a win-win. Now you might be thinking, what about real estate or bonds? While both can be solid investments in a diversified portfolio, neither offers the same level of protection as gold does in a crisis. Real estate can lose value when the economy struggles, and bonds are directly impacted by interest rates and inflation. Gold, however, tends to shine when other investments are under pressure. Let's face it, inflation is rising. If your money is sitting in a savings account or even in traditional stocks, you're losing value without even realizing it. Gold, on the other hand, maintains its value. That's why it's a smart move to consider a gold IRA to protect your wealth against inflation and market volatility. Here's the thing. If you're someone with $100K or more in your IRA or 401K, or even $5 million in savings, it's time to take a serious look at a gold IRA. This could be one of the best moves you make to protect your portfolio. And if you're ready to learn more about why so many retirees are moving their savings into gold, check out the link in the description for your free gold IRA guide. The bottom line is this: economic shocks are a real threat to your retirement, but you don't have to wait until it's too late to act. Diversifying with a gold IRA can be the key to protecting your wealth from the next downturn. If you're serious about securing your savings, especially if you've got a substantial IRA or 401K, a gold IRA could be exactly what you need. Remember, thousands of Americans are already taking action to protect their wealth. Don't wait until it's too late. Click the first link in the description to get your free gold IRA guide today. Take the first step in securing your future.